All right, welcome back to my loyal followers, subscribers to the Dr. Shalaris Sports and Finance YouTube channel. So, today we're going to talk about education, financing, loans, and scholarships. All the fun stuff that comes with college. So, one of the questions that I've been asked is, what is the value of a college degree? Well, according to a textbook that we looked at, uh, $500 or more weekly earnings for a bachelor's degree compared to no bachelor's degree. That's a sizable amount. Think $500. So over 52 weeks, times are coming in. Also, those with a bachelor's degree have a 1% lower unemployment. So those with a bachelor's degree are employed more than those who aren't. What we know is that professional degrees has the highest earning potential. So those with a JD, an MD, CPAs, MBAs, those have a higher earning potential than those without. There is no mistaking, college has increased. The cost of coming to school has increased in recent years. Part of it, tuition. Tuition really go up, and there's multiple factors that play into this. One of the major ones is a decrease in state funding for schools. Back in the 1970s, used to be the good old days of education when you go to school and I didn't pay a single thing. Okay, well, that's great. There's a lot of state support that went into those schools, but now other things have come up as population increases across the U.S. More dollars have to be put into building roads, doing everything else, all those other things, public services, public fees. So tuition has seen an increase. Fees are another one that's seen an increase. With tuition, well, fees. Usually it's harder to raise tuition. Sometimes tuition is set and tuition is usually reported in a lot of databases. So we keep that down. Well, we can increase your fees overall. Uh, and then there's the total cost of tuition, total cost versus tuition. And total cost is a number that can be put out there. Here's your total cost. Here's a, I think those are just marketing numbers that are put out. Well, it's not always true. Your cost of attendance, total cost of attendance. Well, there's ways to keep that down. One, books. Don't buy books from the bookstore. There's an easy one. Scholarships. First and foremost, do your research. Find the scholarships that exist out there. Find them all. There's plenty of scholarships. A lot go unclaimed because people don't want to do it. Some may require you to write a 500-word statement on something. Why is the earth round? Oh, write a statement. Maybe get a scholarship. Who cares? Who cares? The money's there. You're getting free money. So think about that. Take it from me. I should have done it more. Coastal Education Foundation. There's a lot of scholarships through here at Coastal Carolina University that have a potential to be used and doesn't require much effort. Who knows? Grants. There's a Pell Grant that's out there. If you qualify, if family qualifies for it, do that. There's work study grants that are available, so you work for it. This is money that doesn't have to be paid back. GI Bill, use time, use the resources that are available to you. Loans. Here's this beautiful graphic of them. Stafford loans are usually the most common ones out there. Perkins loans are available. Parent Plus loans are there too. I believe I have two of those. At least I think I have three that are on here. And private student loans. I highly recommend staying away. Don't get involved with private student loans if at all costs. Please do not do that. Let's talk about repaying your student loans. Federal student loans offer you the greatest options for repayment, especially consolidation. So when you're done, when I finished up my, well, first 9 years of school, and 4 degrees later, I had 26 different federal student loans on my credit report. It made it extremely difficult to get a loan, to get a mortgage, to look at this, because they couldn't understand what was going on, how I had 26 different loans on there. So I consolidated all those down to now I just have one. And once you get it consolidated down, there's different aspects on here, such as Standard repayment, don't recommend it. Extended repayment, don't recommend it. Start looking at the graduated pay as you earn. So if you're in a job that's pretty much stable income and earn a little bit more every year, go graduate pay as you earn. Income contingent. It's great. Usually the two you'll see a lot of are income-based repayment. The last one are referred to as IBR, or graduated pay as you earn. And we think loan forgiveness. It's been in the news a lot lately. Um, but Public Service Loan Forgiveness, or PSLF program, if you work at a governmental agency, nonprofit, agency is in need, one of these aspects, after making 120 payments, so monthly payments, or 10 years, your loans are then forgiven, which is fantastic. If you, for somebody like me who has $150,000 in federal student loan debt, it's fantastic. I will be paying that back until, who knows, maybe I'm in retirement. So the PSLF is a fantastic tool that frees up the liability, your liability on your credit. Great tool to have. And then discharge. So we think, discharge, how can I get rid of these? Well, there's only certain ways. It's extremely hard to get rid of a student loan debt, especially federal student loans. One is death, total permanent disability for not able to generate revenue. There's that. Fraud by a school, one that's been in a lot of the media lately of these for-profit institutions who are out there who don't really adhere to the missions or are using it. That bankruptcy. Bankruptcy is very hard. Usually in a bankruptcy, student loans are not forgiven or discharged. So, but there is a couple cases, and it's starting to become more case law on bankruptcy and discharging. So keep your eye on that. Going to college gives you some certain tuition tax benefits. Now, when you do your taxes, there's the lifelong learning credit and the American Opportunity Credit. This gives you credits on your taxes for the tuition you paid in school. Tuition minus your unreimbursed expense or reimbursed expenses or unreimbursed. So if you went to school and $10,000, you had $5,000 in scholarships, really you only paid $5,000 to go to school. So you potentially could get a $2,000 credit. Tax credits are fantastic. Reduces your tax liability. Student loan debt interest. So as you're paying back your student loans, you will have interest that you've paid. That is deductible to $2,500, and there are certain phase outs for both single and married filing jointly of how that can impact different aspects. So with that, thanks again for listening to another episode and watching another episode of Dr. Schiller, Sports and Finance.